Hello, friends. Picture this for a moment. You are standing at the checkout. You have already bagged your groceries. You hand over your debit card and it is declined. You know the money is there. You checked your balance this very morning. But the screen says no. The line behind you is growing, and for one cold second, you feel something no one your age should ever have to feel locked out of your own money. Here is what most people never realize until it happens. Your bank can place a hold on your account legally without asking permission first. Not because you did anything wrong, but because of a rule meant to protect you that ends up freezing the money you need. By the end, you will know which of these 5 everyday moves trips up the most people, and it is almost never the one they expect. Stay through to number 2. It is the single thing that turns a 2-week freeze into a 2-minute phone call. Let me be honest. There is a lot of fear online about banks freezing senior accounts. Some is exaggerated, some flat out wrong, but some is very real, and the rules are genuinely confusing because your bank never explains them. So today I will separate the scare from the truth and show you the simple steps that keep your money reachable. Quick context first. This video is for everyday seniors and pre-retirees in the United States who manage their own accounts. Everything here comes from publicly available official information. The FBI's Elder Fraud Report, the United States Treasury, and FINRA, the financial industry regulator, and I will name each source as we go. This is educational content only, not personalized financial, tax, or legal advice, and nothing here promises you any specific amount of money. Everyone's situation is different, so before any big decision, talk to a licensed professional who knows your circumstances. One quick thing about why I make these. I am not here to frighten you or tell you the system is out to get you. I read the actual rules, so you do not have to. If that is useful, subscribe and turn on the bell. And tell me in the comments, has your card ever been declined when you knew the money was right there? Let us start the countdown. Number 5 is the one almost everybody gets backward, so let us clear it up first, because it is the quietest one, and quiet is exactly how it catches you. You may have heard a savings account goes dormant after only 12 to 24 months untouched. Not correct. According to the Consumer Financial Protection Bureau and your own state's laws, the usual window is 3 to 5 years with no activity. You yourself start, and the bank generally has to try to reach you first by mail. So where's the trap? Automatic deposits like interest landing on its own often do not count as activity. Only the things you do yourself count. If an account sits long enough with nothing but automatic interest, it can be classified as abandoned and handed to your state's unclaimed property office, and getting it back means paperwork and waiting. The fix is insultingly simple. Log in or make one small manual transaction at least once a year. That tells the system a real human is still here. Now, a question before we move on. Did you know your bank could pause one of your transfers all on its own? Hold that thought, because trigger number 3 is the one habit that can actually turn into a federal crime. Number 3 is structuring. The Treasury's Financial Crimes Network requires your bank to file a routine report anytime you move more than $10,000 in cash in a single day. Take the fear out of that. The report is completely normal, and millions are filed every year for honest reasons. Here is the trap. Some people hear about that $10,000 line and think they are being clever by staying under it. So instead of taking out $12,000 at once, they take $9,000 on Monday and $9,000 on Wednesday to avoid the paperwork. That deliberate splitting has a name, structuring, and under federal law it is a crime all by itself, even when every dollar is legitimate. The money can be 100% clean and honest, and breaking it into smaller pieces to dodge the report is still illegal. So the rule is easy. Need a large amount of cash. Take it in one transaction and let the bank file its ordinary report. Breaking it up is what gets innocent people into trouble. Number 1 is large or unusual cash withdrawals. You walk into your branch, ask for several $1,000s more than usual, and the teller politely asks what it is for. Your first reaction is that it is none of their business, but that teller is not being nosy. They are following federal guidance designed to catch when a senior is being pressured by a scammer into pulling out cash. In their own clumsy way, they are trying to protect you. If your answer does not satisfy the system, the withdrawal can be delayed. The simple way around it is to give the bank a little notice. A quick call. I am coming in Thursday to take out $4,000 to pay a contractor. creates a record that the withdrawal is expected, and dramatically lowers the chance of a holdup. Let me give you an illustrative example, and to be clear, this is a composite, not a real person. Ray, 73, a retired electrician in the Midwest, tried to send his grandson money through a payment app to a brand new account he had never used before. The transfer was blocked and his account paused. He felt that cold jolt of panic some of you have felt. But because Ray had set up one specific thing in advance, a single phone call cleared it up that same afternoon. That one thing is trigger number 2, the most important minute of this video. But first, number 4. Number 4 is sending money through apps like Zelle or Venmo to someone brand new. This ties directly to the grandparent scam. Someone calls pretending to be a grandchild in trouble needing money this second. These calls are no longer easy to spot because criminals now use artificial intelligence to clone a familiar voice. So, banks treat a first-time app transfer to a new recipient as one of the highest risk moves there is and often block it to investigate. The stakes are real. According to the FBI's Elder Fraud Report, Americans over 60 lost billions of dollars to fraud in a single recent year, and those losses keep climbing. The catch is the same block that stops a scammer also stops you from helping a grandchild who genuinely just opened a new account. So if you are sending money to someone new, call your bank first. It clears the path before you ever hit send. And now number 2, the one that answers the real question underneath all of this. Can they really do this to my money? The honest answer is yes. Through FINRA, firms can place a temporary hold when they reasonably suspect an older person is being financially exploited. For investment accounts, that initial hold runs about 15 business days, and banks have similar fraud hold powers. But here is the protection almost nobody sets up, and it changes everything. It is called a trusted contact. Under FINRA's rules, you name one person, a family member, a close friend, an attorney, whom the bank is allowed to call when something looks unusual. Listen closely, this is the part to write down. That trusted contact cannot touch your money. They cannot move a single dollar. All they can do is confirm to the bank that, yes, this is really me, and yes, this transaction is legitimate. A verified trusted contact can turn a hold that might have lasted weeks into a phone call that lasts minutes. That is exactly what saved Ray. You add one by calling your bank or visiting a branch, about 10 minutes, and it costs nothing. Here is the rest of your reachable money plan, because the trusted contact works best with a few habits around it. Give your bank advance notice before any large transaction. Log into every account monthly and make one small manual transaction so none drifts toward dormant. With payment apps, remember new recipients are the highest risk, so call ahead. And keep a second account at a different bank, so if one is ever held up, you are never completely locked out. Let me bring it together. Number 5, keep quiet accounts alive with one manual transaction a year. Number 4, call ahead before sending app money to anyone new. Number 3, never split a large cash transaction to dodge the report. Number 1, give your bank notice before a big cash withdrawal. And number 2, the most important of all, set up a trusted contact. So a freeze becomes a phone call instead of a crisis. So here is what to do. 3, check whether you have a trusted contact on file on your bank's official website or by calling them. 2, make one manual transaction in any quiet account this month. One before any big withdrawal, give your bank a heads up. And for your own situation, please talk to a licensed professional who knows your circumstances. Do me one favor. Share this with one person who would want to know it before it happens to them. A parent, a spouse, a friend who still writes checks. And next time, I am going to walk you through setting up that trusted contact step by step, because it is the single move that protects you the most. I will see you there.